You've been to many COPs. Give us your helicopter view of this outcome. What do you make of it?
Well, it was better than I expected 2 years ago. You've got to remember the context in which the COP was undertaken. We had a global pandemic, many countries struggling in that situation. And yet at the same time, countries came to Glasgow. 90% of world's GDP is now committed to net zero. Most of the G20 countries, Australia excluded, did update and strengthen their 2030 targets. And we have seen some very significant action at a sectoral level around coal commitments on gas and forests and so forth. So overall, it's better than I would have expected a couple of years ago. But as the report before this said, there's still much more work to be done, especially around updating 2030 targets next year.
So that's the point that we heard in that report there as well, isn't it? That is going to be a yearly pressure point.
Yeah, it is probably one of the most significant outcomes of COP. So essentially, the agreement made in Glasgow says that the country should be revisiting their 2030 targets and updating them in line with the science next year. And that was important because, as the report also said, we've made a lot of progress and potentially kept 1.5 degrees in sight, which is really important for institutional investors. But there's still a gap there. And all countries, including Australia, particularly Australia, are going to need to step up and help fill that gap.
Do you believe that it does, regardless of the uncertainties that remain, does it accelerate the drive around investment towards net zero?
Absolutely. We've seen at the COP about 130 trillion in assets under management commit to get to net zero by 2050. And to back that up, there'll be a whole bunch of transparency needed, a whole bunch of accountability needed. But at the end of the day, to meet those targets, institutional investors, banks and insurers are going to have to change their investment activity, which means they're going to favour markets which have strong climate policies. They're going to favour markets which are decarbonising rapidly and over this decade. And they're going to favour markets which have stable policy settings and ones which aren't constantly at the mercy of domestic politics.
Now, is there greater awareness, Erwin, about what's happening at the state level in Australia? As you know, the Perrottet government has its 50% reduction by 2030. Other states have much more ambitious plans. Does that overwhelm, in some ways, the fact that the Morrison government isn't budging on its own 2030 target?
No, it doesn't, because what we see from the state commitments is they are unlocking investment opportunities. But we've got to start moving away from the mindset in this country that we're seeking to unlock a trickle of money, but we're seeking to unlock a flood of global capital. And that global capital is sitting there. At COP, we saw over half of global assets under management urge governments to strengthen their 2030 targets because that's the best outcome for long-term investment. And that's where they're going to be seeking their best returns. So the national policy matters, particularly in global markets. And one of the concerns that over the last few days is the government signalling that it's not going to increase its 2030 target, is essentially signalling to capital markets that Australia is not prepared to live up to the commitments it's made internationally, which increase sovereign risk. And that's a situation we should be avoiding.
Is that the case even when the Prime Minister is saying repeatedly that the projections are going to exceed 35%? It almost makes the target null and void, doesn't it?
No, because if you're a global investor who is allocating trillions of dollars a day, you cannot stick an aspiration into a financial spreadsheet. You need to be able to stick a target in, and you need to be able to stick in things like carbon pricing. You need to be able to understand what the sectoral plans are within that country about how they were going to achieve net zero across the entire economy. And at the moment, Australia has very little of any of those things. The net zero target by 2050 is really important and really welcome. But essentially, by not strengthening the 2030 target, the government is signalling to investors internationally that it's prepared to undertake a disruptive transition to net zero emissions, not a smooth transition to net zero emissions.
Is that the case even as we are seeing the pieces to the puzzle gradually filled, like the EV plan announced last week, like the modelling released on Friday afternoon, gradually more detail around that 2050 strategy?
Well, the modelling released by the government was not investment-grade modelling. That would not cut muster in any major financial institution in terms of thinking about how you're going to design a portfolio approach to managing your investments across your entire portfolio, let alone what a government should be doing in terms of managing the impacts of climate change across the entire economy. Was essentially the risk that we have at the moment, which is we've told the government many times, we've articulated very, very often, is without clarity around the 2030 target, as well as the clarity around the 2050 target, capital costs will continue to increase in Australia and we will continue to see capital fly out of the country.
Erwin Jackson, Director of Policy at the Investor Group on Climate Change. Thank you, as always, for your time. Appreciate it.